Hello, Kevin Crampton here, your favorite real estate expert, doing all the deep digging and finding out everything there is to know about all of the trending topics on the Google machine. Bringing you another couple of articles that I found that are extremely trending topics in the Google machine for this week. And the first one comes from us. I found this really interesting. This one comes from fastcompany.com, and it's showing us a good visual representation of kind of how the markets are changing in relation to pre-pandemic levels in terms of inventory. So you probably don't need me to tell you, but supply and demand factors are when there's more sellers than buyers, it's a buyer's market. When there's more buyers than sellers, it's a seller's market. And so think of it kind of like a teeter-totter. So this is a really cool article that describes kind of where we're going in terms of inventory nationally. And so something that I really found crazy is some of the lowest amount of inventory in relation to pre-pandemic levels are actually coming in the Midwest. This is really crazy. So basically the most profound sellers markets, you're looking here: Stamford, Connecticut, Hartford, Connecticut, Illinois, Pennsylvania, another Connecticut, New York, West Virginia. These are all Northeast and Midwest areas, which is really interesting. In contrast, the areas that are seeing the biggest rise in inventories are all kind of in the South and Southeast and even Southwest. Huntsville, Alabama, up 85.4% in terms of inventory. Active listings in the market, that's crazy. But this is what I really liked about this article is it gives this super cool kind of heat map that shows you a really good representation. So you can see, if you look here at the key, anything that's kind of these blue and green kind of cool tones is showing an uptick, a rise in inventory, and anything that's more of these earthy tones, kind of orange and brown tones, that's showing less inventory. So right here you can see the whole Midwest and Northeast is seeing less inventory, meaning that the supply and the demand equilibrium is currently in favor of the seller, and by a lot. But you can see that down here through the South, Southeast, you're seeing a lot of the market really stabilizing and probably to some degree correcting itself. And you're starting to see houses that are staying on market longer and just a higher degree of inventory. So I found this article really interesting, and there's a lot of other articles that kind of support the same sentiment that there are areas of the country that are starting to retrace and starting to kind of come back to earth, which is a great thing, especially if you're an aspiring home buyer. So if you live in the Midwest and the Northeast, more than likely premiums are still going to be on the table. There's still going to be a lot of competition for homes. But if you live in the South and Southeast, you might start to see a few more options come available to you, a little better pricing. This is all positive news if you are an aspiring home buyer. So the next article that is trending, and I saw several articles about the same topic, but I like this one the best. This one's coming from Realtor.com, which of course is a reputable source, and it's describing the impact that Gen Xers are having on the real estate market, and it's actually quite interesting when you start to delve in, because so often we talk about a lot of different things. We talk about bedrooms, bathrooms, neighborhoods, and all these different things, but it's interesting to kind of get into the numbers of the way that age demographics kind of control the market in relation to sort of the place that they're at in their life. right now. So there's basically four main generations that are currently still living and active and potential to buy a house, and that's the baby boomers, the millennials, the Generation Z, and the Generation X. So Generation X is defined by anybody who it was born between 1965 and 1982, and of all of the generation demographics that are currently in the market, this is the smallest in terms of population. So it's interesting that the smallest generation in terms of population is having quite a impact on the real estate market. So if you read this article, and I'll link all of the articles in the description of the video, if you read this article, it goes through to describe that Generation X accounts for 19% of the US population, but they represent 24% of the current home buyers in the market. Well, that's what we call divergence, meaning that there's a kind of an imbalance between the amount of population that they are in relation to how much of the market share in the real estate market that they control. So it's very interesting. So 24% of the home buyers are Gen Xers. However, around 60% of the Gen Xers already own a home. So that's another interesting statistic. The article also goes on to say that Generation X is the second highest earning generation with an average of $126,900, almost $127,000 annual income on average. That's pretty damn good, actually. So they've climbed the ladder. It goes on to kind of say, the types of houses that they're buying and in relation to the other generations. Another kind of interesting thing is that Gen X is the most indebted generation of the four generations, with the average Gen Xer having $45,557 of student loan debt, with a average mortgage balance of $278,935. So that's another really interesting statistic about the Gen Xers. With interest rates currently hovering around 7%, many of the Gen Xers are effectively locked into their mortgages because most of them were buying houses in the early 2000s when the interest rates were so much more favorable. And in this article, it says that their average rate is right around 4%. Well, now with the rates being at 7% to 7.5%, essentially they're locked in, and we see this all the time. And we're starting to see it with anybody who purchased a house over the last couple of years because interest rates were at historic lows. So now basically, if you're a potential home seller, you are faced with the decision of selling your home, cashing out the equity, which most people have a great equity position, and most of these Gen Xers almost certainly have a great equity position. But the double edge of that sword is that now you're going to be trading in that low 3.5%, 4.5% interest for the 7% interest. So a lot of these Gen Xers are starting to become locked in to their mortgage and simply unwilling or unable to sell their homes. And this exacerbates the inventory deficiency in the Midwest where I live. Because a lot of people just can't stomach the thought of taking that hit. So it's interesting that the small demographic in terms of population is such an active demographic in the real estate market, but they're more active on the buying side. So if you go through this article, it really breaks down a lot of kind of what the decision would look like for a lot of Gen Xers in the way that they're really starting to impact the real estate market, just given their unique situation. So here's just a couple of articles. I'm always doing the deep digging so that you don't have to. And if you like this video, give it a like and a share. And as always, thanks for watching.